Hello everyone, I'm Erin from WebNazar, your digital lens on everything trending. Today, we're diving into another important story, idea, or innovation shaping our world.
On June 12, 2026, the stock exchange processed the largest initial public offering in history. SpaceX raised $75 billion in a single day, resulting in an immediate market valuation of $2.1 trillion. Based on his ownership stakes in SpaceX and Tesla, this valuation pushed Elon Musk's personal net worth past $1.1 trillion, making him history's first trillionaire. This milestone created a vacuum across the financial markets. Investors liquidated positions in other sectors to participate in the IPO, siphoning liquidity away from the rest of the commercial space industry. The fallout was immediate. Space stocks as a whole dropped 27%. Retail investors who held positions in specialized firms like Intuitive Machines saw their portfolios lose over a quarter of their value in a matter of hours as capital rushed toward SpaceX. This concentration of capital suggests that Wall Street is betting on a single winner to dominate the industry, rather than investing in a broad, diverse space ecosystem. To understand the risk, look at the gap between the company's price and its performance. While valued at $2 trillion, SpaceX recorded a net loss of $8.7 billion between 2025 and early 2026. Analysts at Morningstar arrived at a different conclusion, estimating the company's actual value at $788 billion, less than half its public trading price. This raises a difficult question for any investor. How can a company lose billions of dollars every year and still be worth $2 trillion on the open market? Much of that value is tied to the recent merger with xAI. SpaceX is no longer marketing itself solely on reusable rockets. It is now positioning itself as the owner of future technological infrastructure. Investors are paying for specific, long-term goals: the establishment of a 1 million-person Martian colony and the use of the Grok AI model to manage massive amounts of orbital data. To bridge these two businesses, the company plans to launch space data centers, large-scale computing arrays orbiting the Earth, powered by constant solar energy to support xAI's processing needs. These plans rely on technologies that remain unproven. In its own filings, SpaceX notes the engineering risks are high, particularly the challenge of shielding delicate server hardware from the constant stream of cosmic radiation in orbit. The current valuation requires investors to look past today's revenue and prepay for a future that depends on solving engineering problems that have never been tackled at this scale. Beyond the technical risks, the IPO terms offer very little protection for the people funding it. Buying a share of SpaceX provides no actual influence over how the company is run. This chart shows the disconnect. Through a special class of B shares, Elon Musk retains 82% of the voting power, even though he owns only about half of the actual equity. This imbalance led large pension funds and state comptrollers in New York and California to raise alarms. They pointed to mandatory arbitration for shareholders and the total concentration of power as significant risks to public capital.